So, good morning, everybody, and welcome to Crypto Messiah versus Fiat Fundamentalist. Who owns the future? So, the big question today is crypto rewriting the rules of money or just testing its limits? We have one declared Fiat Fundamentalist in the room, Tom, while the rest lean Crypto Messiah. I'm somewhere in the middle. But sometimes I'll play the Fiat purist to challenge the room and keep things balanced. So let me take the temperature of the room. Quick show of hands. Who is a crypto messiah here? Fiat purist? In between? Okay, the guy with the square jacket there, you raised your hands 3 times, so we'll speak later, okay? All right, let's go to the panelist introductions. Next to me I have David Vasilinovic, founder of Crypto12. He focuses on virtual currencies and blockchain adoption and innovation. Marian Habibi, CRO at BitPace. She deals with payments, revenue growth, and merchant-facing crypto utilities. And Tom Higgins, founder and CEO of GoldEye, builder of trading infrastructure, liquidity management, and broker technology. Declared Fiat Fundamentalist.
Hello.
Tom, you are outnumbered today. You know that, right?
Yes.
All right. Let's start with the big picture. Replacements, coexistence, and or just a rebrand. So the first question is for you, Tom. Defend this proposition. Crypto improves the technology, but fiat remains the money. What doesn't crypto replace and why?
So when I say I'm a fiat fundamentalist, this one, it's a bit of a con, really, because what I mean is that the money will always win. So if you have a better technology, as I believe the blockchain technology is significantly better in some circumstances than straight databases, not for everything, but for the right things, then that technology will take over from the other technology, but the money stays the same. So when all of this was invented and it was going to get rid of all of the banks and the traditional finance systems all those years ago, and it was all going to be lovely and wonderful and we'd all live happily ever after and never need a job and all be wonderful. Of course, that was never really going to happen, because if it was going to be that good, then all of the people with the money in the banks would just buy it, because they're not going to sit around and just let the markets just disappear under their feet. So therefore, that means that those with the fiat money, those with the money will always win. They'll always buy into what is going to be successful. Now that is partially happening, but you're also getting the big crypto companies are buying into the fiat space too, because you've got exchanges who are starting to offer FX trading, for example. They're using more advanced technology from the crypto side, but they are still entering into the fiat space. So I do still defend my position that fiat is not going to go away. All money is not going to be replaced by digital assets, but the way that it's traded and transacted and cleared is going to change and going to use the advanced technology that's come about through this industry. The DeFi stuff is another space again. I think that's absolutely fascinating and is another world.
Okay, thank you, Tom. I see Mariam and David convinced, not convinced. Do you want to add something?
Well, Tom said that money always wins, and that's what I'm not too sure about, because if you look down the line what this technology is enabling us to do, and we can see BlackRock adopting it, they're putting assets on chain. So this blockchain technology means that it's enabling people to access assets they couldn't access before. So if you go to Africa, everybody's got a smartphone, but I don't think that so many have an interactive broker's account or any other broker account where they can access and hold assets. So I believe that down the line, 20, 30, 40, maybe 50 years from now, people will not have to hold fiat money anymore. And if they don't have to, if they can hold assets instead, and pay with those assets. Imagine just what crypto is enabling. You could just hold gold, Paxos Gold, for example, and pay your coffee with it through blockchain. Obviously, it's going to be exchanged into some fiat money. So I think fiat as a nominal thing will stay, but I think that people will be holding it less and less and less because of the technology and because of what it enables us to do. So yeah, I think fiat will be there, and I think we're going to have, with our debt-based system that we have in this world today, we're going to have a problem because people will be holding it less and less. That's my opinion in that.
Okay, this is very interesting. I have a challenge for you guys. So you said that, David, you said that there are big players like BlackRock adopting crypto, but if most innovation ends wrapped inside regulated rails, are we calling that a crypto revolution or just finance 2.0 with a new label?
Yeah, I mean,
everybody.
I think you also have to add something, but I think the underlying technology is much better, blockchain, and we're just moving assets, derivatives, everything we can move it on chain. It's going to be much easier to transact, to hold. So I think it's finance 3.0. The only thing is that when you have such a big revolution, things are going to change, fundamental things, such as the debt-based system, fiat currencies, etc. So yeah, it's going to be a challenge.
Okay, so we are still calling it a revolution.
Yeah, absolutely.
I think the other thing, of course, is before people started talking about crypto, when you talked about fiat, you meant a little Italian car. Nobody actually knew what that term meant. You just didn't use it because you just talked about money. So it's just a term has been invented because of something else coming along, whereas really we're just talking about money and the ability to buy and sell things. And yes, all the technology behind it will change and it may be stored digitally. It's still money. So I think we're actually all agreeing, just in slightly different ways.
Just one question. If you could pay your coffee with gold here, would you hold AED or would you hold gold? Or any other assets that you might like? Real estate. Let's say you could pay with real estate tokens, which represent your ownership of some real estate. Would you rather hold real estate?
Shall we go ahead? Sorry, I'm conscious of timing, and we will get to that point, David, later in the... it's getting heated, which is great.
Sterling, I would use. There you go.
All right, let's get concrete. And David, you are next. So we are now talking about where TradFi still win and where is crypto ahead. So David, can you name one thing, and just one thing, your strongest example, where banks will still do better in 10 years, even in a tokenized world?
Yeah, so I think of it as a triangle, right? So you got safety, efficiency, innovation. I don't think that crypto exchanges, blockchain, or the crypto community is ever going to be leaning towards safety, and that's where banks are going to win. So when it comes to safety, they're very safe. They're trying to be efficient, but they're never innovative banks. I've been in so many panels with banking guys when they start talking about innovation. Basically, what they do is just copy innovation, but they don't create. They don't really innovate in that sense. So when it comes to that, I think when it comes to safety, and that's what we want. I mean, initially we used to forget why do we actually need banks, right? But before there were banks in the Wild West, there was much more fraud and it wasn't safe. So they will always be on the safe side. The only question is whether they're going to adapt the technology behind it. And Tom said it correctly. Like we won't use probably any more SWIFT and SEPA and all these different communication systems for transactions. We will just have everything on blockchain. And the banks that adapt on time, they're going to win because they're going to be safe and they're going to use the right, efficient technology. And the ones who don't, who are fighting it, they're going to lose. But we can see already, like on JP Morgan's case, it's the best case where you can see like they were first fighting it because it wasn't safe, but now they see, the technology is actually something we need, and now they did a 180 on it, and now they're also tokenizing USD on-chain, JP Morgan.
Is it something they need, or is it some FOMO exercise?
It's inevitable. I mean, if they don't do it, 10 years from now, they won't exist. So now they're realizing they're slow. That's why when we talk about efficiency, safety, and innovation, they have to adapt innovation, but they're slow at it, but they're safe. And they're always going to be the safe haven. And also if we manage somehow to keep our debt-based system for whatever reason, we're going to need banks, because I think they will be the ones issuing the loans and enforcing monetary policy for each country.
I think the reason that they didn't want it originally was because it was a threat to them. And so when something is a threat, you can say, let's try and kill it. The same thing happened in the photograph industry. Kodak tried to kill digital cameras, digital photography, because they wanted their analog photography to continue. So I think as soon as JP Morgan realized that they can't kill it, then they back it.
And Tom, another question for you, and this is for brokers, right? Can you name one thing brokers can't ignore in crypto markets, and how could you plug it into existing broker infrastructure without breaking risk controls?
So as a provider of technology into the traditional world, so the foreign exchange world, as most of the people at this show are, but also a significant provider in the digital asset world, what we see from the traditional world is that all of the clients of the brokers are demanding access to digital assets on the platforms. They all want to trade. They think they want to trade spot, but actually they want to trade CFDs because they don't understand about the financing. So they actually want to trade a CFD product, and they want to have exposure to a nice volatile product. That's where the demand is all coming from. That's where the brokers who are not doing anything about it are suffering, and that's where we're getting a lot of business on that side of things. Now, it brings all sorts of problems because it's 24/7, and most brokers here are not 24/7, they're 24/5. So they have to have pricing, they have to have staff, they have to have risk people, they have to have customer service people available at the weekend, which is a pain in the arse if you haven't got it to put all that in. It's expensive. But that's something that they really, really can't ignore.
Thank you. So to conclude, and this is for the whole panel, so Mariam, feel free to intervene if you wish. Where is the meeting point? Banks adopting crypto tech, or crypto adopting bank-style controls, governance, risk reporting? David, Tom?
Well, I believe that at some point of time, we are seeing now banks adopting crypto, and we are seeing crypto companies adopting fiat payment systems. As just Tom mentioned, we have a lot of exchanges right now that started offering payment and FX trading within their platforms. But I still think that today it's the old banking or the TradeFi adapting and, I will say, replicating the blockchain technology so that they cannot reinvent it. They are just too big, too complex, too... and this is why initially, before even the crypto, we saw the rise of the fintech. This is where we see now some companies that, like EMIs, PSPs, this existed to solve some initial problems that banks couldn't solve. Because you cannot solve some complex payments, trading, when you have multiple branches, 1,000 employees in each branch. It cannot work.
Absolutely, and we always see that, right? Innovation starts with startups, and then they get acquired by bigger players who do not have the appetite of risk at the very beginning to go that innovative way. Okay, let's now go to the next question. Here we will go from markets to people, payments and inclusion. And Mariam, the first question is for you. So in regions with high mobile penetration but low bank access, why should people keep trusting the old model? And what does crypto generally improve for everyday users and merchants?
Well, I think that the trust is not moving, it's just being reshifted and redesigned. Because right now we don't have people not trusting anymore the banking system. But we are talking about 1.4 billion underbanked people around the world, in Africa, in Southeast Asia, that it's very difficult for them to have access to banking systems. And in areas where volatility is quite high, especially in Africa, they started adopting Bitcoin even before. I mean, today we have stable coins that guarantees this, let's say, a minimum of stability for their funds. But they started getting Bitcoins even back in 2010, 2012, where the volatility was still high. But for them, it was even better than the volatility that their currencies was subject to. Because when we talk about the Nigerian naira or the, Ghanaian cedis, any of these currencies that we can mention, like people can hold, they were not sure that the value of their currencies will be the same after a month, after 3 months, and they were losing huge amounts of money when they would try to pay one of their suppliers in China.
Yeah,
Swift
absolutely.
used to take 2 weeks if they are lucky to reach the supplier in China. So I think it's not about really trust, but the trust now there is speed, there is the cost when we cut out the middleman tax, because before that every single business in Africa needed to pay between 3 to 7% to complete a transaction to Asia. And it takes, as I said, weeks. Now things are changing.
That's absolutely true. So, David, the next question is for you, actually.
She said a really good thing. She said the naira. They don't know how much it's going to be worth within a month. You know, today it's the naira. Maybe tomorrow it's the sterling. We don't know. But what changes now? We can choose. We can choose whom in which currency we trust, which asset we trust. And then obviously the one that gets most of the trust is going to be held more, and the one where there's no trust is going to be less. So there's a competition now, and I think that's a good thing.
And I still have a question for you, anyways.
Last bit I just want to add on this one. This is, I would say, is technology leapfrogging. So where you have somewhere where technology hasn't really come, so banking in Africa, then something else that is coming on that is much better, it's much easier for that to come in because it's not really replacing people banking because there isn't really any. So it's much easier for the new technology to come in. If you look at 5G networks. You go to Thailand, for example, everybody has 5G on their phones, way before we had it in Europe, because there wasn't an earlier technology for it to replace. It was old rubbish telephone lines that didn't work. So that's why I think these sort of places, technology leapfrogging works really, really well.
I think that the technology adapts because, you are talking to a person that was before coming to crypto, was selling ATMs. That's to tell you how I used to say cash is king for so many years. But when I saw that when I was in Kinshasa or in Lagos, and people need to go 50 miles to reach the closest branch of any bank, that's clearly some kind of exclusion from the financial system. And this is why they adapted to mobile money, which, again, we don't know in Europe because Europeans do not have these problems. But in Africa, in Southeast Asia, mobile money today has been the intermediary phase between fiat or pure cash and crypto today that is used for cross-border payment. It's just the word is redefining itself.
And that's really fascinating. Conscious of time, let's go to the next question. I'm sorry, David, I won't be able to ask you what I was supposed to ask you before. So let's now talking about DeFi, ownership, and mass adoption. Mariam, still you, the first one to be asked here. So we are seeing TradFi and DeFi blend into each other. Is this crypto winning or TradFi taking over the tech? Could you share one concrete example you've seen or expect to see in payments?
Winning or taking over, I think that at the end it's the full industry that is winning, because when you see the TradFi trying to challenge themselves, challenge the statu quo, and moving into adopting a newer technology, that's already a win for the industry. But crypto, I think, has proven some facts, is that today we cannot accept delays in payments. Today we cannot accept payments that cost us 3%, 5%. And the best example is, as you mentioned, is BlackRock and then JP Morgan. Today they have shifted their whole digital strategy to adapt and integrate the blockchain as part of it, because they saw that it's just impossible without it.
And that's very true. I see also with clients of mine, they have put together the two technologies to guarantee payments, so the banking and the crypto together for the same payment transaction, which is absolutely amazing to see how you can blend the two and see traditional finance and fintech and the blockchain just go hand in hand. So, David, zooming out, do you think the legacy system will prevail, or will we go crypto only, or will there be a durable middle way? And can you paint the end state in 1 minute?
Okay, so legacy system will prevail in a certain form. It will be blockchain only in the future. And also, I like really what Miriam said about the payments. They can't wait 2 days. They can't pay 4%. And that's why I think Visa MasterCard is going to be out of business within 5, 10, maybe even 20 years. Doesn't really matter. But Visa MasterCard as such won't exist because there's a much more efficient technology. And anybody can be a payment provider now. You only need a phone and a QR code. That's it. So legacy...
And a license from the regulator.
Of course, yeah. I mean, you're always going to need a license because there needs to be oversight. I think that's...
I'm the lawyer here, sorry.
Need
to say that.
Yeah, but I think it's good. Oversight is good because you want to push, again, if you come back to the triangle of efficiency, safety, and innovation, you always want to push, the more it's used, the more you want to push it towards safety. And that's also, again, where the legacy system is gonna win, because that's what they've been doing for hundreds of years, and that's what we need them for. So blockchain only, legacy banks, yes, but in a completely other form. Payment providers, even EMIs who are concentrating on payments, I think they're all going to be out of business due to blockchain.
So
just to add something here, because we are talking about Visa and MasterCard, and I think their business model as it is today may disappear because cards and payments, yes, will disappear. But we see that Visa and MasterCard are moving now to cards supported by crypto. So we have now more providers that are using Visa cards, and that can get funded from their crypto assets. So they are also changing the game to survive. And
the question is, like, what do you need them for?
Situation.
Yeah, I mean, we mustn't forget the other thing that, of course, the credit card provides you with is credit. You can buy the thing that you haven't got the money to buy now, and that's an enormous part of it. And also the consumer protection. If you buy something that doesn't turn out to be right, you can get your money back using it. That's an enormous part of the thing. So the transactional part, I think, you're completely right, David, will be completely replaced by blockchain technology and that sort of that part. But the credit bit, that has to stay.
Thank you. So let's go to the next and last question, actually. And now we are talking about market structure and tokenization. So, Tom, if you had to recommend a safe first step to a broker wondering about crypto, what would that be?
So the first thing that they should be doing is adding some CFD products to their offering. And so they need to choose a couple of liquidity providers, which could be exchanges, they could be prime brokers, they could be market makers. So somebody that looks to them a bit like an FX liquidity provider. So they would deposit money with them, they would receive streaming prices in the CFDs. So it looks very, very much like an FX product. So it has daily financing rather than the perps in the various different hourly financing, which is complicated. So we'll have daily financing, it'll look exactly the same. They will deposit fiat, or they can deposit stablecoin normally with their crypto provider, and it will function in a very similar way. That is a good entry. Once they start doing more, then they will start getting a little bit more interesting, and they'll start adding probably some spot products. They'll start actually understanding about actually settling with coins rather than just using fiat. And then if they're very, very brave, they could start looking into the whole DeFi world. I mean, hyperliquid is the absolute buzzword at the moment of everybody talking about. We've hooked that up into using our technology into our MatrixNet Bridge product so that you can access it through MT5, for example. So by converting these complex products into something simpler, then they will be able to access that type of thing. DeFi is always going to be complicated for the banks because of the fact you don't know who the other side is, and it could be a criminal, and because the banks can't guarantee it isn't a criminal, they're going to have to layer some sort of KYC on top of that. But I would say start with a CFD product that is on probably Bitcoin and ETH as their first step?
Thank you, Tom. And this is a question for the whole panel. So if tokenization is the road ahead, but what do you think changes first? Market infrastructure, regulation, or risk management? And what should this audience watch first? And please, one sentence each.
Well, if I will start on this one. I mean, regulation is being dragged along by the infrastructure changes. That means that they have to actually do it, because otherwise they wouldn't really want to do it, because they don't really like to do it. So I think you need to look at all of those in parallel.
I think that the infrastructure is already here. Of course, it will continue improving, that's for sure. I mean, we are moving from Web 2 to Web 3, and potentially in a few years we will see Web 4, and I don't know, but the technology will be always improving. Now the regulation will be as well following up this technological move, because...
One sentence. I want to leave some space for the audience as well.
Yeah,
so
sure.
Thank you. David?
We need regulation. Innovation is happening, infrastructure is happening, and what we need to work towards is more regulation to bring safety to this area.
Yeah, and I would dare to say that regulation has to follow, though, in my experience, because regulators and lawyers, we can't foresee what is going to happen in technology. So we need regulation immediately after we have advancement in technology. So now this is the last question for the audience. I would like a takeaway. Again, please, just one sentence. We start with David, Miriam, and Tom, and then we'll see whether the audience have questions. So do you have what is your one takeaway from this conversation today? Tom, you can start, or Miriam.
Shall I start then while David's thinking? You cannot ignore the digital asset markets. You cannot ignore blockchain as a technology. If your board is not talking about what are we going to do in the digital asset strategy, you're too late.
Thank you.
Well, I think that today we are talking about fiat. Fiat will always be a tool. Like any currencies will be just a tool. And the blockchain in the future will be the rails to
Thank you.
Get these tools to people.
If you ask me what my takeaway is, what I learned here today is that what Tom said about credit. I think that credit is going to be a big one, and that we will need credit, we're going to need debt, and that will probably stay in the legacy system. And crypto is not going to be able to help there a lot.
Great, thank you. My takeaway is from hearing you, and your opinion is that the two systems are actually converging. So we won't have, it's not either crypto or fiat, we will have something in between. Okay, now is anybody in the audience willing to make a question or curious about something for our panel? No? Don't be shy. Sorry? Yes, the first, as Miriam said, the first volunteer is always
Can I ask a question, if no one else can ask a question? Nobody has used the two letters that everybody uses all the time, AI, on this panel yet. We haven't talked about that. How do we think that AI is going to affect the market?
Yeah, so I think that AI can't work. So we're moving towards AI agents, right? If you ask me, in 5 years, we won't have any apps anymore. You'll just be talking to your AI. It's going to connect to your app and do whatever you want. It's going to book your hotel. It's going to pay your bills. So the question is, can AI do this through the legacy banking system? And now we're back to payments. I don't think so. For AI agents, it's going to be much easier to transact on blockchain, through stablecoins, maybe even through tokenized assets, etc. But they're going to be communicating and sending money really quick between each other. So you won't be really sending money. You won't be logging into your... I mean, you will be able to, but I think there's going to be less and less. It's just going to move more towards automatization, and that's where, without blockchain, it's impossible. I mean, we in Serbia, if you want to make a payment, you have to go and fill out a paper where you want to send your money, etc. AI can't do that, right? So they need on-chain transactions. So, yeah, I mean, you cannot divide those two. They're just going hand in hand.
So thank you very much, everybody. I see that our time is up. So thank you all, and enjoy the rest of IFX. And please keep this conversation going after this panel as well.
Thank you very much for coming. Thank you.